Well, some pretty substantial weakness in the stock market last week. Does that mean we are starting another stock market crash, or is this just a little pullback in the recovery process? In this week's Market Minutes, I'll show you what to look for before you start buying stocks. All right, well, welcome to this week's Market Minutes. The little different format this week, I have broken up the more educational component, the trading tactics. That now comes out on Sunday morning, and this market analysis video comes out Saturday morning. I'm just going to try that for a little while, try to go a little deeper into each by doing it in two separate videos. All right, so this week we had pretty strong selling pressure. There was a few culprits. One was the concern about interest rates continuing to rise. But I think the more substantial concern was the failure of the Silicon Valley Bank, which caused some contagion effects on other banks. And so we saw the small cap market in particular, where a lot of these small banks are listed, the Russell 2000, suffer quite a bit to the downside. The S&P went down as well. All the markets went down. In fact, we can look at just what happened in all the different sectors. You can see here, it's red across the board. These are all the different sector ETFs. And red everywhere. The only area where there was strength was in the bond market, which we'll look at that chart in a moment. And then, of course, the inverse ETFs did well to the upside, but everything else in the red. So does that mean we are in another sharp correction, a crash? Certainly it felt like it for the last 3 days, but let's talk about how markets tend to crash. And so typically what happens is you break an upward trend line from a falling top. And we had that happen back in January of 2022, and we had a dismal performance in 2022. In 2023, we actually had a good performance in January. We moved up, we broke the downward trend lines, and we started to build some rising bottoms. So the question is, does this week's sell-off jeopardize that cycle of bottoming? I've been talking about this in the weekly videos for a while. We're working through this cycle of bottoming in the market. Let's take a look at the S&P 500 chart. And here you can see, this is the daily chart of the S&P ETF, that the bottoms are still rising. That means the buyers are still in control. And this is this week's performance, which was pretty bad, but it doesn't actually break that cycle of pessimism. Now, if we look at the 3-year weekly chart, we can see that the downward trend on the weekly was broken in January. February saw a pullback, and we're continuing to see that in March. But again, until we break that cycle of rising bottoms, I still think we have a decent chance of moving higher. If you'd like to learn more about my approach to the market, when to buy, when to sell, how I approach the market for day trading, for longer term investing, I invite you to attend one of my free upcoming webinars. There's 3 or 4 coming up. They're entirely free. Everyone that attends will get a free electronic copy of my book, The Mindless Investor. To register, go to Stockscores.com, click on the Trader Trading menu, and go down to Upcoming Events, and you will see the titles, the times, the dates, everything is all there. And to register, you just click on Register Online, and you can register for the event, and hopefully we'll see lots of you there. I think you'll find it very informative and educational. Trade well. So the question though is, should you be a buyer of stocks now? I never like to catch a falling knife. And so what we need to see on some time frame is the market start to build rising bottoms, start to break downward trend lines. So if we jump to an intraday chart, so let's go to a 1-month hourly chart of the S&P, you can see that the trend here is still down. There's the downward trend line. We are far below the downward trend line, which means the market is oversold. That means it is due for a bounce. However, there is no sign of one yet. What I want you to watch for next week is first a break of this very steep downward trend line, and then it'll probably pull back after that. And then if it can build a rising bottom and then start to break that downward trend line, then we're on the recovery road. All right, but until that happens, stay in cash. That could happen Monday, could happen Tuesday, could happen any day. Until it happens, let the market run through this process of correction. Let's take a look at the small cap stocks in the US. because they fared worse than the large caps. And again, that's because of that concentration of small banks in the Russell 2000. But even with that, it still is holding that little upward trend line. If we go to a 3-year weekly chart, you can see that we're still trying to build that base with a little bit of a rising bottom there. That's going to ultimately be the pattern that breaks. Now, in my trading tactics video, and again, this comes out Sunday, I'm going to talk about the cycle of how the market works. And you're going to see certain patterns occur over and over again. So make sure you watch that video. Again, it comes out Sunday. If you're watching this long after Sunday, just go look for the video on the trading cycles. It's really important to understand these concepts. All right, so although there was some significant weakness last week, it's not the end of the world because we haven't yet broken that upward trend line or broken horizontal support. That could happen soon, but it hasn't happened yet. What we want to watch for on the, say, hourly chart or even the 30-minute chart is to at least see the build of a rising bottom and start to break some of these downward trend lines. This will be the first one, and then you'll have the longer term one here to be broken. We're a long ways away from that, so it's going to take a few days to get back up to that. All right, let's take a look at the Canadian market. T.XIU is the symbol, and it did a little better because commodity prices didn't get beat up too much. In fact, gold was up, but similar situation. It's still got the rising bottoms, but it's a little bit damaged, so it's going to take some time to reverse. If we look at the 3-year weekly chart, you can see it's been stuck in this sideways range here for a while, and until it can break through this and ultimately break to new highs, it's going to be kind of a sleepy market with the occasional stock that can do well. All right, how about the bond market? We talked about that, and it made a very significant move to the upside on Friday. So this is the Treasury Bond ETF, and it made a strong gain, which meant that interest rates went down in the bond market. If you want to see a good proxy for interest rates, look at the inverse, TBT, and you can see that it went down, which essentially means interest rates went down. And so that's an important move, and I think that could be supportive for stocks, because for so long, the market's been concerned about rising interest rates, that sort of thing. Well, now we're seeing the bond market actually go up, which means interest rates have fallen back. And I think once this whole business with Silicon Valley Bank sort of becomes a memory, that may be a supporting factor for stocks. So keep an eye on these charts as well, TBT, TLT. All right, what about gold? So gold breaks a pullback from a little double bottom. That's a positive, not tremendous upside to resistance. So I don't know that it's much more than a day trader rally for gold and gold stocks. How about oil? We can look at BNO, and you can see it's stuck in that sideways range that it's been in for a few months. But the more intriguing chart is the 3-year weekly chart. There's your long-term upward trend line, and you're just bouncing along it right now. If we break down through it, then I think the party's over in oil. If we can break up and break this little pullback line, then it's back on for a bull market in oil. It's been kind of a quiet market lately. Watch for that move one way or the other, and I'll keep you updated with these videos every week. And that's why it's a great idea to subscribe to the channel so that you know when these updates are coming. Click on the notifications bell as well. That way, when I upload the video, you'll get an email or whatever you get to alert you to the new video. All right, let's turn over our attention to the currencies. UUP, you can see, went down this past week, and that could be helpful for commodities and perhaps one of the reasons why gold had a decent day on Friday. But in the grand scheme of things, we want to look at that 3-year weekly chart. I think what's happening here is we're just coming up to that little downward trend line. We're holding this long-term upward trend line, and we're probably just going to go into here into a pointy triangle. And then what way do we break? Do we go up or do we go down? That'll telegraph the next leg of the move. So not really easy to predict just yet, so watch for that if you're interested in making a trade on the US dollar. Finally, let's take a look at the Bitcoin chart. And we have all kinds of movement here, and part of that was because of some net asset valuation issues around this GBTC. But Bitcoin had a pretty weak day at the end of the week, and so I think you want to be pretty cautious with cryptocurrencies because it is starting to move down again after trying to be stable for a couple of months, but it's starting to soften up again, so be careful. So if I could summarize my outlook on the market for equities, I'm short-term bearish, but the market is oversold. It's neutral longer term still. And so if we can just make a little bounce back and start to stabilize, I think we might get a good rally out of this. The best rallies always come after weak markets. So when you have a bad week like this, it often follows with some strength. More so for the day traders and swing traders because the long-term picture is still kind of neutral sideways. And then on oil, on gold, really no change in my ratings. A sort of neutral on those with the longer-term outlook for oil potentially getting good. And then an interesting move in interest rates. That sharp move to the downside in interest rates could be a cue that we'll see a little more weakness. One day does not a trend make, so we'll keep an eye on that. All right, so I hope that you've enjoyed this week's market analysis video. I do these every week, so make sure you're subscribed to the channel. And remember, trading tactics, that's now going to come out on Sunday. So if you want to learn something about how to analyze markets, how to trade better, make sure you check in for that. Appreciate it if you click the like button, leave a comment. Where do you think the markets are likely to head? And most importantly, trade well.